Our level of the pyramid is growth. In this level of the pyramid, we have equity partnerships, investments, real estate, growth stocks, mutual funds, variable life insurances, and annuities.
We have chose to tell you about growth stocks, which are shares in a company whose earnings are expected to grow at an above average rate relative to the market.
If you're interested in investing into a growth stock, a good starting point would be to watch the stocks.
Get an idea of what stocks you may want to invest in. Also, how much are you willing to invest? After you have done so, meet with your financial advisor and get his or her best advice.
The typical return expected in the growth of the pyramid ranges between 10 and 11%. To give you a better idea of how much that is, let's say you put in $100. If you earned 10% of $100, you would have made $10. When you add $10 to the $100 you put in, you end up with $110.
The greater amount of money that you put in is the greater amount of money that you will gain.
Most growth stocks tend to be newer companies with innovative products that are expected to make a big impact in the market in the future, but there are exceptions.
Some growth companies are simply very well-run entities with good business models that have capitalized on the demand for their products. Growth stocks can provide substantial returns on capital, but many of them are smaller, less stable companies that may also experience severe price declines.
An example of one that was not as successful was the ShamWow. The ShamWow was somewhat of a one-hit wonder, so to speak, for a short time. The sales took off and ShamWow was just everywhere, but soon enough, the sales dropped.
An example of a growth company is Starbucks. This coffee giant still has a great deal of room to grow. Its aggressive expansion plans include substantial additional penetration into international markets, with plans to double its presence overseas by 2015.
Starbucks intends to make further roads into China and Vietnam, potentially growing that region into its second largest market by next year. The company's domestic goal is to open more than 3,000 new locations in North and South America by 2017. It is also expanding into homebrewing territory and has gained a key foothold in the tea market with its acquisition of Teavana, a chain over 600 tea stores.
Howard Schultz, the company's CEO, has done an excellent job of using social media and customer loyalty programs to increase revenue and promote brand name.
When investing in a growth stock, there is a few important things to keep in mind. Economic factors play a huge role in growth stock, but buy it when it's low and it will grow.
Also, keep in mind your personal values. You don't want to be supporting a company that goes against your morals and values.
Another thing to keep in mind is that the risk may be greater, but the profit can also be greater. The more money that you have, the more you can afford to lose.
And the more time you have before you need the money, the more risk you can afford to take.